Andreas, if we talk strength now, Germany still has an industrial muscle, right? And trusted Mittelstand. And as you just mentioned, the strong US relationships. What are, in your view, the biggest assets Germany can leverage to attract foreign direct investments?
Yeah, I think the most critical and important thing, it's a very emotional thing. About 80% of the Americans, when you ask them, they love and like Germany. They love and like the Germans. That is very interesting because it's not the reverse. If you ask the Germans for the Americans, unfortunately, not the same picture. Now, the second thing, and that is more critical, and that is the dual training system, which Germany's industry is providing, and everyone is very jealous on that. It's combining job and studies very effectively. A third one, I think, is that Germany is under the top patent registrator. So the patents they are providing and developing over years in regard, they are very strong with regard of research and development. And then there is every year the study from Professor Simon on the German, the global hidden champions. And every year, Professor Simon comes with the result that still 40% of the global hidden champions are Germans. So Germany is very, very strong on the hidden champion side. Another positive actually is that because of that hidden champion situation, Germany has been and still is the European locomotive, and not only for Europe, but also beyond. 25% or more of the gross domestic product in Germany comes from the real industry, from production. And if you have been visiting the Hanover Fair recently, the Germans are leaders in robotic, are leaders in sensoric, are leaders in AI applicable for production and machinery. Another thing is, while we are talking a lot about military spend, Germany is already the fourth biggest military spender, aside from the United States, from China, and from Russia. And with nearly 200 billion, or about 10% of German exports into the United States, Germany is, after China, the biggest exporter to the United States, and America is the largest export destination for Germany. And finally, and that is most recent, coming very clearly onto the table, the 1 trillion infrastructure and defense growth booster over the coming years, which Merz has taken alive recently, at a low or very low interest rate due to the AAA rating what Germany has. Interesting but true, the United States has not such a good rating since recently.
Yeah, just lost it, right?
And that will help the German economy to recover strongly, and that is the hope.
That is so great. I mean, Andreas, AAA rating. Now only Germany and I think Switzerland are the few countries left that still have a AAA rating. Is that correct?
It is not very broadly spread anymore. So Germany can benefit with low interest rates to come because of that, in comparison, at least to the United States.
That is, interesting and very, that should attract really for direct investment. Could imagine. Yeah. What you just mentioned about the patents and that Germany still has the most patents, say. I read just recently in a German newspaper that we own so many patents. No, but they're not owned by Germany, but by other countries, unfortunately. So they're developed by us.
Well, that's a problem. We are very strong in developing innovative products, but we are coming now to something what we call the disadvantages of Germany, and the disadvantage one is the going to market strategy.
Exactly. You always know, you can have an idea, right? What my next question would be, because that's exactly my next question, Andreas. I would like to talk to you about the weaknesses, and the challenges. Where do you see the most pressing weaknesses Germany must address, and particularly compared to the United States, competing location? What's at risk if we fail to act fast?
Absolutely. Let me finish the idea on global to market, going to market strategy, GTMS. If we are developing innovative products and we register a patent for that, that is only the first step. The second step, to monetize on it, to bring the new product to market. And here we are very bad. We're very bad. If we compare, for example, the solar industry, we developed the solar industry here in Germany, but it was going to market very successfully by China. And now China is, based on the innovation of Germany, the world leader in producing solar panels. That is for sure a weakness. But there are other weaknesses, Claudia.
May I ask the question here? Why is that so, Andreas? What did we do wrong? What could we do better in the future?
Well, we need to capitalize on big markets, and the challenge we have in Europe, Germany is good in developing new patents, but the market is not big and united enough in Europe to then bring that into a market efficiently and cost-wise efficient. And here you need a big market like China, you need a big market like the United States, which are more uniform than the diverse Europe.
Interesting point. Brings me to another question. So then when we say we want to strengthen Germany, does this actually mean we want to strengthen Europe because Germany alone is not enough?
Exactly. We need to focus on Germany as the EU locomotive, and there need to be a spillover then and positive ways to build on the European market power. But the problem here, and we are coming now to the disadvantages back again, is the diversity of the European market in terms of people, in terms of culture, in terms of language, in terms of regulations, in terms of language and things like that. And the another disadvantage is a lack in Germany first or Europe first in comparison to America first. And some other disadvantages, unfortunately, I'm lining up now one by one. The energy cost, which is in Germany 3 to 4 times as high as in the United States. Germany is a global tax champion, more or less, so the taxes are much too high. Germany has, and also that is due to the EU juggernaut situation in overregulation. We have much too much and much too high minimum wages. 15 euro is too high. It should be remaining at around 12 euro. And too few weekly working hours. Instead of 35, we should stay with 40 or even go towards 45 hours per week. Too many holidays in comparison to the international markets. We have 30 plus additional local holidays, so we need to come closer to 25.
I think only the Italians have more holidays than we do.
Well, we are a real industry. We are a production country which has a production industry, and we want to compete with other companies on the production side. So therefore, we need much more performance motivation, which is much too low. We have, in addition to the 30 holidays, 20 days of sickness. So that adds to 50 days off. And then there is another thing, and that is critical, obviously, in political discussions. We are much too much focusing on DEI and ESG. DEI means diversity, equity, and inclusion, and ESG, the environment, social, and governance regulation, which also includes the supply chain act, which Merz wants to abandon as soon as possible, but is in fight, A, with his coalition partners, and B, also with the European Parliament. And then lastly, we don't have any free trade agreements. Everyone talks always about the Latin America free trade, but it is not active. We talk about the Canadian free trade agreement, but this is not signed by everyone. And we are not having a TTIP, which unfortunately was not successfully negotiated now about 10 years ago with the United States. And as a result, Germany's the foreign direct investments from Germany into the United States is much, much higher than from the United States to Germany. And due also to Trump, it is growing much further. So the investment from Germany to the United States.